Welcome to the program. Today we'll talk about what's happening on the markets. We'll look at the GDP number that's out today. We'll review Wesfarmers' strategy document and we'll give you some super tips before the June 30 deadline. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. Morning, Paul.
Morning, Marty.
So markets, a bit of a sell-off yesterday, down about 1.5%. The US sort of held fairly firm though. Your prediction, your article in the Super Report sort of seems to be playing out at the moment.
I think yesterday I was talking to Charlie Aitken last night on Switzer, and Charlie sort of read it very much as a bit of a portfolio sell yesterday. Everything got hit by about the same. Everybody, almost, I think he said 48
of the top 50 stocks were down.
Which is pretty unusual that everything goes down. Except Qantas. So, look, I think, as I said, I think there's been a bit of softness in our market just because it's getting very expensive.
What do you buy?
What do you buy? And I think that's one of the issues. But look, yesterday was probably overdone. So maybe a bit of a bounce is possible in the next couple of days. I'm not sure so much was related to the GDP numbers, but, you know, that's what the press...
Exports were off, sort of striking fear of a possible worse GDP number than forecasted.
I think the underlying fear is maybe consumers are being a bit hesitant because of, the question about more money having to go to support mortgages and just the downturn we've seen in parts of the retail industry. So I think that's sort of weighing on people a little bit. And then we haven't really seen a lot of great company news recently. So what's the incentive? Apart from the US going up, what's the incentive to buy our market?
Yeah, the large caps have run hard, but people aren't ready to buy the small caps yet.
Well, where they are, the fundies have just taken them to some crazy levels. So, but maybe it's not the small caps, but some of the mid caps. Certainly not ready to buy the small caps yet. No.
GDP number out at 11:30 today. It's been getting a lot of publicity. One of the key numbers that all the market punters are watching. Your thoughts on the number?
Well, I think the first
and what does it all mean?
I think it doesn't mean too much.
And we know how much you love the ABS.
Yeah, look, anything could be, I reckon, from negative 0.3 through to about plus 0.6, right? There's the statistical variances and vagaries about the way they do this are all over the place, right? I think the analysts are tipping about a 0.2 for an annual rate of about 1.6. But look,
and we know if we see a negative, the R word's going to come out straight away. The
R word's going to come out, and again, because the June quarter is also going to be impacted a little bit by Cyclone Debbie. But there you have yesterday the Reserve Bank, all the data in front of it, and it comes out and says we're still confident about 3% growth over the medium term. So in some ways it was a very robust statement from the Reserve Bank yesterday to say that things are actually okay. So I don't think the market sell-off is more as a function so much of GDP. I think it's more just a lack of confidence a bit on the consumer side, and also just things are expensive. Yeah,
and it has run pretty hard for a period of time.
And it's run pretty hard. We were given where it was in November last year. It's run pretty hard.
Wesfarmers, they've released a strategy document today. There was a lot of negativity out there last week. They got a downgrade from Morgan Stanley.
Yeah, downgrade from Morgan Stanley, our own expert, Charlie Aitken. Charlie's gone a bit cold on Wesfarmers. Okay. He thinks they're going to be particularly...
You might be getting the Morgan Stanley research.
No, I think this has actually came out before the Morgan Stanley research. We published this last Thursday,
I should have read that.
You should have read that, yeah. So, Charlie's gone a bit cold on Wesfarmers. I think more so, he is worried about Amazon, and he's worried about... Wesfarmers being the Kmart brand in particular being impacted.
And the issues that Wesfarmers have got, obviously they've got Amazon, they've got issues with the coal business, they've got the property boom slowing, which stores like Bunnings.
Yep, they've got their UK expansion, which has always been hard for Australian companies. They've got a change in CEO and a change in CFO.
And Woolworths is getting a bit better.
And Woolworths is getting a little bit better. So look, a quick look at the Wesfarmers having a strategy today. You can get it on their site. It's about 150 pages.
What's the book summary?
It looks like, having a quick flick through, it looks like a slightly more positive outlook on the Coles business. I think, like all these things, these strategy days are only there for one reason. That's to convince analysts that they're on the right track. So you expect the written words to basically follow the same suit. I think they'll get a slightly more positive view of Wesfarmers. I'm not bearish on Wesfarmers. I actually think it's still cheap compared to Woolworths, but, you can't. The market is the market. And it's an attractive dividend. So I'm not too worried about the changes at Wesfarmers, but that's a stock to watch today. I think the market will probably take a positive from the strategy day.
Should remain a decent income play still, shouldn't it?
Should remain a decent dividend yield of almost 5% on Wesfarmers.
Yeah, can't beat that. We can, but that's good. Super tips, June 30, obviously some massive changes happening.
23 sleeps to go if you're counting. I'm
there you
counting.
Go.
Look, I suppose there are three main tips apart from making extra contributions. First of all, don't leave it to the last minute.
Tip one?
So contributions actually have to be banked. So the 30th of June is a Friday this year, which makes it a little easier, but it actually has to be in your fund on the 30th of June. So if you're using a
So you gotta do
retail
that
industry
Tuesday or
fund.
Wednesday, yeah?
You got to do it Tuesday, Wednesday beforehand, and even for a self-managed super fund, get the transfer done a couple of days beforehand. So that's really tip number one. Tip number two, we all know about the contribution rule. So if you've got any cash around, look at both the concessional side, potentially for salary sacrifice, or if you have some after-tax money, see if you can make some personal contributions before the caps change. And tip number three, you don't have to invest in the share market if you don't like the market, right? It's superannuation is a tax vehicle, not an investment.
You can go to cash.
That's right, you can go to cash. Or if you're an industry fund, you can make your next lot of contributions into a low-risk, cash or fixed income option.
Yeah.
You don't have to put it straight into the share market if you don't like the market.
Good tips. That's all we got time for. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money.